What is going on, ladies and gentlemen? In this video, I'm going to be going over the Judah swing, and honestly, this is my bread and butter, and this is how my win rate's so high. It's literally just a singular move that I look for, and I would say out of every single live account I ever take, most of them are going to be the thing that I'm talking about today, which involves a Judah swing. What a Judah swing actually is a false move if you're expecting one direction. It's like a false move in the other direction. And the best time I've found in my past 3 years of learning and studying ICT is a Judah swing will always be the highest probability to take a play off of at open. Okay, at the New York Open. So New York session opens at 9:30. Futures are 23.5, remember. Okay. But at 9:30, the actual stock market opens, and this is when it's the best chance for a Judah swing. So let's say that I am bullish for the day. Okay, let's say there's buy side liquidity resting above here, and I think that it's going to be hit. Okay, a good form of buy side liquidity might be equal highs. So maybe we have equal highs above, and maybe they were formed during London. So maybe there's London, perfect equal highs. Cool, that's our target. So let's say we come into the open, we chop, boom, 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 boom. If I am bullish at open, my bread and butter setup to get to these equal highs is a false move down to sell side and then an inversion back up. Okay, so it's a false move down to some sort of sell side before, maybe during London or maybe pre-market at 9:30. And then an inversion for every leg up on the way up. This is my favorite type of play in the market. It's the play take the most. Every single stat I have tracked of, my plays I take, they're all between 9:30 and 10 off of a false move when I know the bias. And the reason why this setup is so good is because when the market opens, you got all these guys thinking, oh, follow the trend of the market open. Oh, we're going down. When in reality, it's a false move to trap people. Okay, this is where people get trapped because you got retail traders shorting the breakout. They think, oh, we just broke out here, right? So they're going to short thinking we're going to, go down. And then you also got traders getting stopped out of their long positions who tried entering before the market opened. If you think about it, people entering here, they know that the market should go here to the buy side, right? ICT calls these guys dumb money, and this is the true smart money. Okay, waiting for that manipulation, okay, which is another term for this Judah swing at open. So the Judah swing itself would in reality be this swing point here. Now, this can definitely vary. Sometimes we will get a bigger Judah swing and maybe we'll go down even further. Okay, maybe we'll go down like here and then we get a move up. The Judah swing doesn't have to be 1 minute. It doesn't have to be 5 minutes. Generally, the most I'll give a Judah swing is 30 minutes, okay? Because a key reversal time is 10 o'clock. So sometimes if we just keep going down and then we hit this level or a level down there and it's 10 o'clock, this is a key reversal time. So if we come down and I still am bullish for the day and it's around 10 o'clock, I'm still looking for a move up, and I would consider this whole thing right here to be the Judah swing, like this move from 9:30 to 10. But sometimes the Judah swing will only be like 5 minutes. It might be 5 minutes down and then boom. Okay, you just have to be willing to like react enough in order to catch this move. So when we come down, I am not picking out any certain sell side. I will have a few marked. Like if there's like a low with a fair value gap here, I'm going to have this marked, and then I'll look for a Judah swing down to there, and then I'll look for reaction. Let's say we don't react off this. Well, then I'll look for another fair value gap lower in the higher time frame that we could react out of after. So it doesn't need to be like a pinpointed reversal zone. Like you don't need to technically know the reversal zone before it hits. You just need to wait for the reaction in hindsight, and then if we get the IVG and we're delivering from somewhere and it makes sense, then it's going to be a good play. A lot of new traders come in and they think that they need to know exactly where we're going to reverse. So they think, oh, we need to reverse here, we need to reverse here, and they try to predict it. But I always say react, not predict, because sometimes we will get a violent V-shaped recovery here, and I will take this instead of waiting for down here, because honestly, if we have two very good zones, either could react very well. Let's just look at a few live chart examples of this. So we actually got a really good example today, except this play for my model would have been a break-even trade, but that's besides the point. I want to get used to showing you guys plays that even though some might be break-even plays or even some might be losses, they're still good trades in general. So this one you can see if we draw a horizontal line, this was the 930 open. Now I was bullish today, okay? But the thing with today is I actually wanted a Judas swing down here and then up. And you can see, okay, we never quite tapped this low right here, right? This is, I wanted the Judas swing below this low, then up. But we just happened to not get it. So what's so significant about that? Like, why is that important? Well, I just got done saying where if we have multiple zones where we could react off of, I would be willing to take an earlier Judas swing because I don't really know if we're going to hit this or not. Because what if there's an SMT here? What if ES hits this low but NQ doesn't? Right? So that's where it comes down to reacting a lot of time. And that's why, you know, I always react, not predict. So today we come down and the 931 candle forms a bearish rally gap. And again, as I said, this is where all the retail traders think, oh, I'm going to short here. This is a breakout. And this is where people from pre-market get stopped out. So you got a bunch of guys getting stopped out. And this leg right here would be considered the Judas swing. But let's go in live time, or let's go in hindsight. If we got a candle close like this, right, stop loss, I'm going to guesstimate to be around here. Because as you guys know, my model, I do a close below the fair value gap. And let's say I'm going to target London high. Okay, let's say this is London high. London high was actually really here. Okay, this is a 3 AM high, so we'll just say this. But this is like a type of play that I love to take. Now, do I think this would have played out better if there wasn't CPI tomorrow, right? At the time I'm making this video, there was CPI tomorrow. Yes. Do I think this would have played out better if it, maybe hit this low? Yes. But the fact is, this is still one of my bread and butter type setups because it's still like a move I've seen repeat itself over and over and over and over again. And, to be honest, like that down move at open and then the inverse is just, it has a very high win rate or a very high break even rate because this is where I go break even. And you can see this trade. This trade was good, but the close was way too high. So some people did take this in my stream, but unfortunately the close of this candle just made it very hard because it closed so close to the break-even point. But will sometimes the candle close here? Sure, and that's why I'm showing it to you because the candle could have closed here, and this would have been a play I would have, definitely risked a lot of money on because, it's my bread and butter. So this is kind of what I look for, right? I look for a run of stop losses from pre-market. I look for some sort of sell side to be swept, and I look for some obvious move back up. Let's just go over one more example just so you guys get the hang of it. I'm trying to show you non-perfect examples because you'll see a lot of perfect examples, but I'm going to show you some non-perfect ones because I think that'll make you guys a little better. So this is from Friday, and I was bullish again, okay? And you kind of can see the Judas swing was a little delayed. So in this situation, we went up at open. Okay. And if I'm bullish on the day, I want us to go down. So I saw this move and I'm like, okay, not really the Judas swing I want. Now I said on stream, I'm like, I would want this low to be swept and then a long setup, but we never got it. But what's the important part? The important part is even though I wanted this low to be swept, the reaction I saw to this trade in live time was extremely bullish. And I ended up taking a paper trade on a demo account. I took a 15-second long. Now, I do not trade the 15-second long or the 15-second time frame on my live account. So I ended up taking this play, and I sold for about a 4 or 5R. Okay, if you go on my Discord, you can see the executions. I'm not lying. I did it. I stream. But the point is, it still made sense with what I wanted, right? We went up first, which is kind of not what we want. But then we went down, and we got a very, very, very bullish reaction off these lows. And when I saw this, I'm like, you know what, guys? I wanted you to swing lower, but I think this is going to be it, just because of how strong these two candles back up were. And, to be able to call that out and, react to that, even though I want lower or even though I predict the lower is important because what if there was a fair value gap here on the 30-second? What if there's an inverse here? I would have totally slapped this. But, the fact is on Friday, there just wasn't a gap here to take. Now, if there was, I would have slapped it. There was none on the 1 minute. There was none on the 2 minute. So there's really no entry for my live account here. But I'm still showing you guys because it's not the IVG that matters. It's the Judas swing. It's the liquidity sweep, right? This is my bread and butter move. Will there be a gap here on any given day? Sure, there could have been, there just wasn't on this day. So I want you guys to understand the concept of this even without the actual fair value gap, because sometimes there will be a fair value gap and sometimes there won't. So you just got to understand that.